All right, everyone. What is going on? A little bit of an interesting day today. We had to call in the troops to see if I'm going crazy or not. Maddie with the red shades to block out the blue light. What's going on?
Every day I wake up and I aspire to be more like you, Steven.
I doubt that very much. But before we go on, before we get into it, everybody, I have no idea what's going to come out of my mouth. Take a moment, read the disclaimer. I'm not a financial advisor. I have no idea what I'm talking about. I just do a lot of research and have opinions. Matt is not a financial advisor. Anything he says is his own opinion. Please do your own due diligence. Do not make any decisions based off of what you hear from two guys on the internet. Anyway, thank you. So, Matt, I woke up this morning and our favorite financial legend made a little post. Did you happen to see it?
No, Steve, I'm excited because I've been a sleepy baby all day, being lazy. And I think it's another great opportunity for me to read to the audience like last time.
You know what? Get to it, Matt. Here you go. Here is Cassandra Unchained, what he put out.
Okay, so do you want me to read this, or do you want?
No, we're gonna read. We need to frame it. Okay.
Okay. So you want me to read it? Is it yes? What am I framing, Steven?
Read the screen.
Okay. A question I have for Oracle, Google, Meta, Microsoft, Amazon, Nvidia, and Caterpillar, and all the rest. When does the spending for AI data center build out actually end? It is consuming all your cash flow. You are borrowing, you are financing in ways that you never have. Apparently, because it is so urgent, because it scales. But if it scales, when does it end? Now you're engaging in accounting tricks to hide expense, to protect your earnings. As the impact is so severe, you will be tortuously adjusting your earnings in new and sinister ways. When does it end, Steven?
Those sound like accusations.
Sounds like he's pulling in everybody, Steve. He's gone to war with everyone.
I mean, Michael Burry decided to wake up and choose violence. Nothing wrong with that. But I tend to think, my own opinion, that some of this doesn't necessarily need to be said. But I responded, as I normally do to these things. And I'm feeling left out because I either, one, have not been blocked, or two, have not been responded to. Feeling a little left out, Dr. Burry. So, Matt, you have not seen anything. So before you actually read what I responded with, how do you feel about what he said?
I mean, I see where he's kind of going. You know, I have had similar pushback, but I have also recognized that you need to do something. So to just come after everybody, I think, is a little bit too much. I've never said that data center expansion was wrong. You know, I understand why there's an increase in Capex too. But I see where he's coming from, right? I think he's reasonable to question it. Whether or not I would have framed it in that manner for the public, I don't know. I think that might have been.
So
I think it might have been too much, Steven.
So here's what I responded with, Matt. And by the way, thank you everybody for being here. Michelle, I am thoroughly jealous of the meal that you and Ray had last night.
I got to look at it. I didn't even see that, Steven.
You know,
Maddie's a sleepy baby, and he needs to stop being so shook on a Sunday.
This was posted last night, Matt.
Even worse.
Ray and Michelle were posting pictures last night in the group thread.
Well, I can't believe. Maybe if I look at him again, maybe I'll recognize it because I remember being in the group chat before I went to bed. So I don't know.
It wasn't even that late.
I don't know. I don't know what's wrong with
me. Oh my God, Michelle just said that we can show the class. Okay.
Well, funny enough that you say that, Michelle, because I'm making a very comparable. I haven't made it yet, but that is about what this thumbnail is about to be.
All right, so Matt, are you ready to read my response?
I think you need to preface a little bit more, Steve, and then I'll read it because I want to make this thumbnail before I
Okay, so basically I need to kill some time. So what I decided to do was think before I responded. And I have a problem with what he wrote. I don't have a problem with him questioning the Capex cycle because that's fair game. But the whole accounting thing really annoyed me because this isn't one company. He's talking about all of them. They all have top tier auditing firms. How are all of these companies classifying their expenses incorrectly? And if they are, how come nothing is being done about it? Now, I did not look at his Substack. I have no idea if he put out a new article or not. I'm not paying for his Substack. Somebody did respond to me saying that he addressed all this in his Substack report. If that is true, I apologize for not reading it. If you want to send me a copy, I will be happy to read it. And if I agree, I will make a new post about what I agree with. I just got a text that was very interesting from somebody, and I will save that for later. So, Matt. Oh, wait, hold on. Steve, he is rage baiting and you fell for it. I don't think he's rage baiting. I think that this guy generally believes this. I think he believes it. And I'm very interested in seeing what Matt creates for the thumbnail because he looks like he is in such deep thought and concentration. He is. He's in deep thought and concentration. Wow. All right, Matt. Holy cow, you really are going at it. What are you building over there, Matt?
Steven, this could potentially be the greatest thumbnail yet.
Oh, Michelle just sent me photo. Look at that. Michelle, I actually have WhatsApp open. I can't show it though because your phone number will come up. And we don't want that.
Maybe you should just save her name as Mishi and her phone number won't come up anymore, Steven.
I didn't put her name in. It automatically pops up, Matt. You think I know how to do that?
Steven, it's 2026.
I don't know how to do any of this stuff. I can download the pictures though. And that's what we'll do to show them. I will download the pictures because we do not want anybody's phone number showing up. All right. So Matt, this is what you missed yesterday. And I am absolutely falling in love with this new Instagram account that I found about food. It's amazing. So I gotta say that looks beautiful, even though I'm not a oyster person.
It does.
Looks beautiful.
I don't know why I didn't see this. Oh, Lord.
I mean, I'm with it. I am with it.
I like
Approved by me. Congratulations, Michelle and Ray. Looks delicious. So Matt, are you ready yet?
Yeah, I'm getting coached by the shadow government as we speak.
What are you talking about?
Oh, Steven.
Well, what just happened?
Oh, Stefan.
You know what? That's not nice.
Yes, it is. Hold on. Let me
No,
zoom in.
bullshit. That's not nice.
Yeah.
Not nice at all.
You gotta save this, overwrite existing file. I'm uploading this to my. This is
Matt, we are all patiently waiting for you to show us what you just did.
It's not the best. It didn't come out as I wanted it to,
Can you share it, please?
but it's up there, Steven.
It is up there, so now I gotta find it on YouTube.
I just saved it. You can. I'm just getting some of my other
Okay.
documents and stuff in order. But
Matt
yes,
Money. Oh, story. Dude, you're so ridiculous.
Sorry. I know I've been stalling for 10 minutes to try to get
All right,
this.
everyone. The king of thumbnails is about to freaking take us down the Storytime road. Love it. All right, Matt. Now that you're done stalling.
Does it really show up that blurry?
No, I had to zoom in. It looks fine. I just have to zoom in so people can see it. All right, Matt, here you go. Story time with Matt.
Very good. Dear Dr. Burry, Michael J. Burry, this question has been debated by the investment community and it deserves a data-driven answer rather than a rhetorical one. The more important question is not when Capex ends, but whether the incremental capital being deployed is producing higher operating cash flow, stronger earnings power, and durable strategic advantages. If it is, then the spending is not inherently a problem. It is an investment cycle. Steven, are you coaching Dr. Burry on business cycles?
I may.
Okay. The accounting tricks question is important. And I generally like to engage with you on this topic. You allude to companies tortuously adjusting earnings in sinister ways, which I also thought was interesting, and you said that because I don't see that personally. But you don't specify what you mean. As a shareholder who has analyzed these balance sheets at length, I want to understand what I may be missing. Are you referring to capitalization of software development costs, depreciation schedule adjustments, or lease accounting? These are legitimate areas to evaluate, but without specific data points, it doesn't give shareholders the market anything. Sorry, it doesn't give shareholders or the market anything actionable to analyze. The meat of your post was, when does it end? The reality is that it ends when demand for compute stops growing. These aren't speculative bets on technology that might work. Microsoft, Google, Amazon, and Meta are deploying capital in response to existing paying customer demand that is currently outpacing supply. That's not a bubble dynamic. That's a capacity constraint. The spending slows when supply meets demand, not when someone rings a bell. Steven, I feel like I should do this. I feel like I should do this for a living.
Not when someone rings a bell, right?
I like it, but I feel like I need to do this for a living. This is fun. I have tremendous respect for your track record, but do you have respect for his track record? 50-50. I have 50% you live, 50% you die. I don't know. So 50-50. I have tremendous respect for your track record, but data here suggests that the CEOs who built the largest, most profitable enterprises in human history are deploying capital to not just meet the demand, but drive future profitability for shareholders. The burden of proof for sinister accounting sits with the claim, not the companies. Sorry. I have a wire in front of me. The burden of the proof for sinister accounting with the claim sits with the claim. Sorry. Excuse me. The burden of proof for sinister accounting sits with the claim, not the companies. I'm generally open to being wrong, but here is the data I'm looking at. I'm openly inviting you to invite intellectually friendly conversation about this with me anytime, publicly or privately.
All right. So then I do what I always do, and I went through a tremendous thing with all the actual data, which we don't have to read all of it because I'm going to discuss it, but we'll go to the bottom of this. I gave him every data point about this. Okay. So we got a couple more paragraphs.
Okay. In my opinion, the data leads to one conclusion. These companies are not burning cash recklessly. Every dollar of incremental capex deployed since 2021 has been met with multiple dollars of incremental operating cash flow, which I agree, and EBITDA. That is not the signature of a bubble. It is a signature of infrastructure that is working. To your broader concern about when it ends, the reality is that the companies closest to demand signal will know before it shows up in the data available to the rest of us. When Microsoft, Google, Amazon, and Meta start to scale back on their capex allocations, it will be signal to everyone. Sorry, it will be the signal that everyone is waiting for. Dr. Burry, you were right about 2000. You're right about 2008 when almost no one else was. No matter what will happen, you will always be a legend in the investment community for it. The level of credibility that you have amassed from your previous predictions is exactly why specificity matters here. Broad warnings without solid evidence don't protect investors, as they just create noise. If there are accounting irregularities worth exposing, please name them, and I'll look at every number with you. That is a conversation that would be worth having a public forum about.
What do you think?
Steven, I truly appreciate you. I do. I think it is really well written, as always. I'm also curious about what he's talking about with respect to accounting irregularities. I don't know if he's talking about depreciation and accelerated depreciation schedules. I don't know if he's talking about what happened with Facebook in the third quarter, how they're able to write their net income so low, which obviously their net income, their ops cash remained relatively the same comparatively to the previous year, but their net income came down, which means that eventually they're going to pay less in taxes because they have this massive write down, right? So, but yet they still keep the cash, right? So it's just like a accounting thing. So I don't know if he's referring to something like that. But I think, you know what I think is actually happening here, Steve? I think he knows that he's on thin ice with respect to Palantir. Maybe he was right that the stock price should come down because the valuation was high. But I think he's trying to deflect and be a salesman here and say, actually, let's look behind door number 2 so that you forget what he was talking about behind door number 1. So when Palantir eventually does rise to the occasion and rebound in price, he still has something to hang his hat on. Because I think that he came after one company too hard. He doesn't want his whole legacy to be dependent upon it, because he actually found out he doesn't know as much as he thinks he knows about Palantir. He was stuck reading articles from 2021, 2022 about Palantir. And anyway, I enjoy a nice little lime seltzer here, Steven.
Nice little lime seltzer, huh?
To start my afternoon.
Okay.
But yeah, I think that that's what he's doing. I think he's trying to say, actually look over here, so that when everything happens with Palantir and everything returns.
All right. So here's the problem I have with this. All right.
I'm Steven.
First off, Apple, since 2021 to the TTM, trailing 12 months, because they do not report on a calendar year, their Capex has increased by 9.5%. It has gone from $11 billion to $12.15 billion. They have increased their Capex on an annualized basis by $1.06 billion. That's basically nothing, okay? Microsoft has grown their Capex from 20.6 to 83.1 billion over the same time frame. Their Capex on an annualized basis has grown by 302%. It's grown by $62.47 billion. We see the direct correlation to increased profitability with reinvesting in yourself. On an EBITDA basis, Apple's EBITDA over the same period, when Capex increased by 9.5%, has increased by 27%. Microsoft's 117%, 4.5 times more on growth. In 21, Microsoft generated 80 billion of EBITDA, Apple 120 billion. They were 40 billion more than Microsoft. Now, Apple is doing 153 billion and Microsoft is doing 175 billion. They're generating more EBITDA than Apple. The same holds true with the other companies regarding Capex deployment to profitability growth. Whether you want to talk about Amazon, Alphabet, or Meta, the numbers are the numbers. Meta's EBITDA growth, 86%. Alphabet's 69%. Amazon's 146%. So the idea that these companies are all wrong and the idea that these companies should not be investing in themselves is short-sighted. It's only geared toward traders. And in the long term, these companies know their businesses better than Dr. Burry or anybody else. So for him to come out and complain that they are allocating all this capital, it's their capital to allocate. And if they believe that they're seeing enough demand on backlogs to warrant this, who is he or anybody else to say that they are wrong in the way that they are running their businesses? These companies have all created businesses that generate 12 digits of EBITDA and cash from operations. There's maybe 6 or 7 companies in the world that can say that. And to say that all these companies are wrong is insane. And to come out with statements that allude to fraud without giving proof is a little crazy. Now, if he provided the proof in the Substack, my opinion is that he should have at least put a couple of lines about that in this post. I don't know if he did or he didn't. His opinion is warranted because it is a tremendous amount of capital being deployed. The bigger problem I have is the accounting irregularities. How do you prove that? And they all have top tier auditing firms. If we look, I'm willing to bet that their auditing firms are either EY, KPMG, Deloitte. It's one of them. It's not some chop shop. So I don't see how you can make that statement. I don't get it.
No, I hear you. I'm with you 100%. I mean, I think there you can't make claims like that, and I'm with you 100%. Like, he also recently was long Google with calls. Like, it wasn't too long ago. So when did he make this massive come to Jesus moment? Because I think between the GameStop saga and now, he had long calls on Google. So he knew that they were investing a lot of capital expenditure into the infrastructure build out. So at what point did he realize that these irregularities in accounting principles or accounting numbers that they're presenting on a quarterly basis started to look irregular and was fishy to him? Because I don't remember when he sold, but he recently held it, and it was a big deal because a lot of people obviously follow his trades after what happened with GameStop. When he invested in Michaels, when he invested in all these other smaller companies that were kind of really debt ridden and needed to be kind of refinanced and everything like that. People were really keeping a sharp eye on it. So I'm very curious when he came up with this. But I agree with you 100%. If there was anything specific that he covered, he's not going out, at least from what I see, and writing a whole big article on a Substack. Maybe that's to come. I don't know. But anyway.
So somebody in the chat said EBITDA is a scam. Okay. I also did the same thing for cash from operations in the post. I just chose to go over EBITDA, but the same numbers hold true. Apple's cash from operations have gone from 104 to 135 billion, increasing 30%. Microsoft's 77 to 160 billion, increasing 109%. Meta's has increased 100%, Alphabet's 79%, Amazon's 201% from the same period. So whether we're looking at cash from operations, whether we're looking at EBITDA, the reality is all of the Capex being deployed is being met with increased profitability. Apple is the litmus test because they are not deploying the Capex and their profitability is not scaling the way that these other companies are. And it just goes back to my point. Do you really think that these companies will be deploying this much capital instead of doing buybacks if it wasn't going to benefit them in the long run with increased earnings power, increased margins, and making their moats more fortified? The answer is no. These are not dumb CEOs. These are not dumb management teams. So the idea that all of these companies is wrong is driving me freaking crazy, as you can say.
Well, so being devil's advocate, right? I mean, you and I had this discussion last night about how I'm fearful of how much capex some of these companies are spending. Is it all going to be for naught? I don't think it will be for naught. Will the margins be what they expect? I don't know. I think that that's a place to be kind of explored as we kind of go into this and check on a quarterly basis. But I think the problem I still have, like you stated, right, is the accounting thing. And so once again, like, I understand potentially where Burry's coming from. Is it too much capex too quickly? Do they need to do it with a little bit more? Invest through the cycle rather than invest a big massive wave and then eventually pull back. Kind of like what happened with Amazon in 2020, 2021, when they realized they were spending too much capital and warehousing and infrastructure there, and eventually they pulled back because they realized, oh, well, we have enough warehouse spacing based on the data, kind of like what you're talking about. Based on the data, we know we have enough warehousing, and these trends aren't that it's going to continue to accelerate in terms of e-commerce as a percentage of total sales, but it's leveling off and actually going down. So we might have too much potential warehouse space, but that doesn't mean you get rid of the warehouse space. It just means you slow down a little bit and wait for it to catch up. And now warehouses are being built just like data centers for Amazon all around the country still. So it's not like that all those things went for nothing. They obviously were making a gross massive amount of margin, which is why Amazon was putting them in place. So I don't know. It's just interesting that he's now kind of viewing this as some massive problem. I don't view it as a problem per se. I think the amount might be a little bit too much. I'd rather see some of the companies be a little bit more balanced in terms of utilizing and having some free cash flow. I don't want to see any companies really go into debt, but sometimes debt is a useful tool. I use it all the time in real estate. So, I mean, it just depends on how you're using it and leveraging it. What gets scary is, and this is why I've always kind of been kind of cautious about how much capex people are spending, is looking at Oracle and will they be able to get out of their debt spiral that they've kind of been in? And they're not really even in a debt spiral, right? It's just, will it actually pan out for them in terms of the ops cash? And I'm cautiously optimistic it will. The ops cash will eventually show up. The debt to EBITDA will skyrocket down. And it's the same thing that happens with Venture Global. Venture Global has a massive debt to equity right now, but they're building a third facility. That third facility is coming online. It's as big as their two first facilities combined. So once that facility comes online, you're gonna have this massive opening of cash flow, and the debt is going to remain the same. And so you can pay that debt off as fast or as slow as possible, depending on what contracts you wrote, of course, if it's callable, etc. But yeah, I think it's claiming gap accounting errors and irregularities is where I kind of draw the line of being kind of insane. Insane's not the right term. What's the word I'm looking for, Steve?
I don't know. Perplexed?
Perplexed. Perplexing. Confusing. I don't agree with it.
So on the debt side, look, the reality is, and I hate saying this, but in the long term, these companies can spend 100 or 200 billion in capex and it doesn't matter. It really doesn't. Alphabet has $127 billion in cash and short-term investments on the balance sheet. They have another 69 billion in long-term investments. They have 47 billion in long-term debt for a net liquidity position of 149 billion. These companies taking out debt is not impacting them. Microsoft's debt, 35 billion, net liquidity, 75. Amazon, 73 billion in debt. They still have 69 billion net liquidity. Meta just raised capital in the debt markets. They have close to 60 billion in debt, but they have 81.5 billion in cash and short-term investments. They have a net liquidity position of 50 billion. The amount of debt that these companies just raised does not matter. They have more cash on the balance sheets than their debt. Their cash from operations is all over 100 billion. They all continue to scale. And yes, the CapEx numbers are on a TTM. They are not accounting for the forward growth that is expected to be spent throughout this year. But as that CapEx is spent, their cash from operations is going to increase. And we could see in some cases, Microsoft, Alphabet, and Meta, the cash from operations that they generate this year is more than what they spend on CapEx. The only one that is likely to go into negative free cash flow is Amazon. And if this is all being paid for from cash from operations, I don't have a problem with it because I'm looking 5 years down the road. All this capital that they are deploying makes it even harder for their competitors to compete. Now, Oracle is a different story, and I agree. Oracle is in a very scary position. But I never discuss Oracle when I discuss these. The true hyperscalers, I don't think there's anything to worry about. They are seriously fine. And I am not worried. I think that this is a ridiculous thing for him to be going after. And I am really questioning the accounting side of it, because if they are doing something wrong, these are the companies that have the most shareholders in the market. So put it out so we can really go through it and we can have accountants go through it, because this would seriously hurt everybody, from individual investors to people who are just investing in ETFs. You're muted.
I think you hit it right on the head, Steven.
I mean, the numbers are the numbers. And making a big deal about these companies, I think, is getting old. And of course, he just put out a post 6 minutes ago and has nothing to do with this.
Steve,
He doesn't want to engage.
Just like your hips, the numbers don't lie.
You know, the guy does not want to engage. He just put out a post about GameStop.
He's playing tricks, man. He's playing tricks.
Like, I don't get it. Why does he block everybody else and respond to everybody else, but he doesn't want to have an intellectual conversation with me? I don't get it.
Why are you so shook? You just trying to get blocked?
Obviously, I'm not shook.
You're trying to get. You're upset that you're not. Upset Steven's not little block.
No, I'm just saying. You know, this is Dr. Burry. Like
MJB.
MJB. Like, what are you running from?
Someone needs to clip it and send it to him. What are you running from, Dr. Burry?
Like, obviously, you're highly intelligent. Obviously, you have an opinion. I just want to know what it is about the accounting, because maybe I'm wrong.
No, I would love that, because I'm not. I taught myself how to read these balance sheets, right? I taught myself how to read these income statements. I didn't get college educated. I didn't get an MBA. I didn't get any of that. I'm not smart like Steve. So for me, sometimes I read things and I read them too quickly and I get it wrong. So if there's something that's irregular, I look at the ops cash going up, Steve. I see Capex spent. I see ops cash going up. I'm happy, right? And so just like you, I'm excited when Amazon spends money on their AWS infrastructure, because I know that means they're going to get a massive amount of cash flow from operations coming from that particular amount of Capex, right? Whatever the return on capital employed is, particularly for their cloud business, I know it's going to do well, right? And I keep track of, is their AWS margins is increasing, decreasing, etc., right? Because I look at that as, if it's decreasing, then the infill that they're doing with respect to data infrastructure, margins are getting, I don't want to say stretched, but they're getting challenged because of the fact that they need to either decrease prices, or the cost to build these data centers is going up because of inflation. You know, what exactly is going on? And so I try to keep track of those things, right? And I've been excited about Google reinvesting, because Google Cloud Platform has been one of the reasons why I was so bullish when so many others were not on the company back over the past several years, and they were saying it should be below 100 and blah blah blah. And I was buying stock in the 120s and 130s. You know, I wasn't the earliest on Google, right? But I saw the numbers and I saw the trends for Google Cloud Platform, where Google Cloud was a drag on the rest of the company because it was losing money because they were investing so much. And I saw the trends going where profitability was getting better and better and better, to the point where I knew margins would eventually be in the 20s, the 30s, and eventually climb to the 40% plus range, which I think we're going to be headed towards in the next 24 months. So I don't know. To me, I see where he's coming from with respect to, is it too much too quickly? I don't agree on the accounting stuff, and I would, if he sees something that I don't have an accounting degree. I'm self-taught on a lot of this stuff. No, you know, other than listening, just like everybody in the chat is listening and trying to get an education on, you know, what's hot, what's not, what do we do in terms of the bogginess, right? And we're not advisors here, but I'm at least trying to utilize other people's experience to shape my own. I don't know. Maybe he's got something that we don't see, Steve.
Yeah, I mean, look, I'm not, as I was very public about in the post, this guy's a legend. He's highly intelligent. He gets a lot of things right. And I legitimately want to know where the accounting irregularities are. I have several very close friends that are accountants. I want to know what he's looking at so I can validate it with people that are actually CPAs. Because if there's something truly going wrong, I would like to know so I can make an informed decision if I should exit these positions or not.
I think it's very valid. I think it's very valid.
I'm not an accountant. I just know the stuff that I've read from the accounting books, and I am not a certified public accountant. I would like to take these points that he has, go to several CPAs I'm very close friends with, and see what they think. And
that's some classes though, Steve. Don't downplay
yourself.
But
that doesn't matter. Like, I want professional opinions on this.
Okay.
And the reality is the people that I'm going to ask have worked at KPMG, have worked at EY. So I think that making these types of claims without putting the data out there publicly, it's a little odd.
Yeah. I would say we need to call one of these people. I know one of the people you would call. I'd say we need to call them, but putting them on the spot to be like, hey, use your CPA skills to do these live. What's irregular about them? I think is too much.
Yeah, I mean, obviously, I wouldn't ask them to come on, but I would ask them privately if there's any validity, the same way I did in the group text to one of them that you're in about something else that happened around the depreciation schedule. And you know exactly what he said. He said that what Senor Burry was saying was bullshit.
I don't know, Steven. Do you think he's just doing this to drive clicks, or do you think he's,
I don't know, but
he's under such pressure? Or
I mean, look, when Burry made that post about depreciation schedules 6 months ago or so, Matt's on a text thread. He can attest to this if I'm lying or not, or if I'm exaggerating.
Steve doesn't lie. It's like the numbers.
I sent it to somebody who has worked at those firms as an auditor. Matt is on the thread, and he gave a very detailed response about why Burry is wrong to us privately. Is that correct or incorrect, Matt?
You don't lie, Steven.
Thank you.
Correct.
So I am happy to discuss this with Burry. I would like to consult with my connections that are accountants on these data points, because if there's a problem, well, you know what? This should be investigated. But if it isn't a problem, I don't want a false narrative being claimed. Now, that's a bigger problem I have with it. Does this spiral into a false narrative now?
Well, that's part of it as well, right? Like, and this is the part that, the reason why I stood up, right, is you can be wrong about certain aspects of things, but don't get angry or block the people that actually have valid pushback. Because to me, the biggest, this is a Scarface kind of like quote, but it's just like the only thing that I have really is my word, right? And so if I look into the mirror and just let something pass by, it doesn't make me feel good, right? I have to face myself in the mirror tomorrow, so I'm not going to lie to myself. I'm not going to, I'm just doing the best that I can to put the best version of the world out there that I can potentially control. So if I see something that I don't agree with on X or on YouTube, I'm going to call it out, and I'm not trying to do it to be malicious. I don't want to hurt anybody, but at the same time, I don't want false narratives or disinformation out there because somebody got a little juice under the table, or I don't know what the hell. But I see this all the time with Palantir. I see this with so many other companies that people are like, oh, but look at this over here. But they completely neglect all the benefits of what's been going on with Palantir or with what's going on with Google or Amazon. And they just want to spread this specific slice of narrative, just like some of the mainstream media kind of does. It's like, no, forget all this other stuff. Let's hyper focus on this, because this is going to drive clicks. This is what's going to drive advertising dollars. This is what's going to drive views. And to me, that's why I've been on YouTube now, almost going on 10 years, Steve. That's why I'm not the biggest YouTuber, because sometimes I don't like to talk about what's hot, what's not. I talk about what I think is going to make money. I talk about what I think is best for me, not trying to hop on the Tesla train when that's hot, not trying to, I was in Palantir, not because it was hot, but because everybody hated it. Like you and myself and Amit, like we were in the trenches when people were like, this company's going to zero. It's a black box. It's $6, etc. And I'm like, no, guys. I use the software, not black box, not black box. I use it. I've been using it back then for 4 or 5 years at that point. And so it's just astonishing. Like that's the way I operate. That's my MO. You know, I really try to just make sure that when I look myself in the mirror every morning, I'm like, you know what? I'm not perfect, but I'm doing my best, and I'm at least trying to erase any misinformation or disinformation from being out there. Because at the end of the day, these companies are, like you stated, driving the economy, and for anybody to try to take them down on false narratives, I think is un-American, and I also think is just I'll just leave it at that. It's un-American. I mean,
so Burry put a post out, and look, I'm not taking anything away from him. As I said, this is an impressive resume. The guy is a legend. But this post also signals that this guy is an active participant. That is not what I am talking about. I'm not talking about the next day, week, month, or year. I'm talking about the long-term investment and viability of these companies. I am not saying that these companies won't go lower in the long term. That is not what I'm saying at all. What I'm saying is that these deployments of CapEx will likely drive significant levels of profitability in the future, creating an interesting long-term investment case. I mean, look, he has done a lot of things. No question about it. What I find funny is people tag me in this and tell me to sit this out. Hey, buy high. I want all the smoke. How about that? Like, I'm not hiding. I'm not using.
you know who's hiding? Buy High's hiding. Who the hell is he?
Yeah.
Your name is right there. Steven Fiorillo. Michael J. Burry's name is right there. Who the hell is this guy? I hate this. I hate people. He's using Tom Lee in a McDonald's outfit. You know, like I put my name out there. Anybody can look me up on LinkedIn, you know? Like I'm a real guy. Who the hell are these people that are be able to hide and feel like, and I get it. Like there's just so many people LARPing out there, Steve, live action role playing, acting like they're certain political figures. It's insane.
No, it's hilarious. And I almost wish that you had to use your real name on X. I almost wish that, because I think a lot of the stuff that gets posted on there wouldn't be posted. But anyway, I think that this is getting ridiculous, and I am really interested in the accounting aspect of this. I want to know what he's looking at. And once again, he's doing a great job of making me actually consider buying his damn Substack.
I think that's all it is, Steve. I honestly think that's what it is. I think that's what he's trying to do. He's trying to make it be like, oh my God, Michael J. Burry is predicting this. He's been right on other things. Maybe he's right on this. So, I don't know.
He has over 233,000 subscribers.
Yeah. I mean, good for him. Really good for him. I mean, I'm not jealous of that. I mean, I'm happy that he's making money. I think he deserves some people that buy a Substack. I get it. But what I dislike is the disinformation. That's or old information that has been proven not true, right?
So he has a monthly membership of $49 a month. He has an annual membership of $439 a year, and then a free one. I just did the free one to see what this does. Is there anything new in here? So let's share the screen. Cassandra Unchained. So I'm not paying for this yet. Palantir, we know this was the big one that came out. And accounting, Tales from the 10K. So that came out a couple of days ago. I'm not seeing anything on here that the people on X were referring to about this topic. So I don't know what I'm seeing by the titles, and maybe it's in something with the blessed fraud reoccurrence that you can't see through it. But from these titles, it does not look like he put any of this data out on the Substack, to my knowledge. So I want to know what accounting regularities he's talking about.
I'd love to. Dude, there should be 0 ads playing during my
I
live
don't
stream.
think you can get this at all. This is really annoying. But be that as it may, I would love to have an open conversation with him, publicly or privately. I think the guy's highly intelligent. I will be cordial, and I respect the guy. So we'll see what happens. I think he's wrong on this, but if he's right, this would be Armageddon for the market.
Oh yeah, I would agree, and that's partly the reason why I would love him to be on basis points. You guys have a civilized conversation about it, not publicly, right? There's just the 2 cameras and or maybe 3. I don't know how many camera angles. There's a lot of camera angles in there, but yeah. Speaking of, you guys have some people lined up. Obviously, you can't say who, but you got a couple people lined up, Steve.
We may have some people lined up for basis points.
I'm as a curious, person that's not behind the scenes, and also an avid watcher and follower of basis points. When should we expect the next episode?
Not sure, but we may have some people lined up.
I'm excited, Steve.
Hopefully sooner than later. We got several, and I think people are going to really enjoy the next several episodes. And I'm excited about where the future goes with basis points. And look, I'd be happy to host Burry on basis points. If he wants to come on in person, open invitation any day. I will block my schedule if he wants to do that. I'll cancel anything I gotta do and make the time.
How is basis points doing? You guys up to 10K yet?
I have no idea. I haven't looked.
7.93. We gotta post this in the chat.
I have not looked. I'm excited. I think there's 2 shows that we did came out really well. I enjoyed both the conversations. I think Josh Brown and Dan Ives are gentlemen. I think they are highly intelligent and very interesting, and I think the shows were really good.
What do you think that they would say about this? Well, you don't put words in their mouth.
I'm not going to put words in either of their mouths. There's a reason I did not tag Dan Ives or Josh Brown in my post.
Yeah.
Because I'm not trying to bring anybody into it. You know what I mean? I tagged you guys at the end only because we talk about it. I'm not tagging them. I'm not looking for people to gang up. I truly want to have a one-on-one discussion with the guy.
I would love to have a beer with Burry if he drinks. No, if he doesn't, sorry, I didn't mean to.
Shit, I'll take him out to dinner.
Dude, yeah, I'll fly up for it. If that happens, dude, be like, can I bring my friend Matt? You blocked him, but
listen, I'll take everybody out to dinner if he wants to come up.
I mean, I don't know.
I don't know.
So tomorrow, Steve, what are we buying?
The market's open tomorrow. I'm just hoping that I have internet tomorrow. I'm making sure everything is freaking charged. I'm making sure that my portable internet hotspot is charged, my cell phone, my laptop, my tablet. We're supposed to get 12 to 18 inches up here, Matt. I'm going to be staying inside.
Pardon me, man. Wishes I was there.
I mean, I don't know.
I feel like I would hunker. You know what I didn't? So first and foremost, I want to tell you a story. I wanted to open with this, but I got so into the thumbnail that I was creating that I forgot. You want to hear something hysterical about my mom?
Yes.
So those of you guys that don't know, I manage. I do property management for one of my mom's rentals, and it was my dad's first house, and him and my mom moved into it. back in the late 70s. We rented out to Villanova students, and so we've been doing this by paper, right? I don't know why, but I was just like, this year I was like, no more paper, right? DocuSign's a thing. We'll use some sort of internet based, digital signature system, so that way we don't have to be sending paper back and forth to people. I was like, it's 2026. I'm done with this. It's in my control now, right? Since my dad passed in 21, I've been handling it for 22, 23, 24 to now. And so these are students for 2027 and 2028 that are wanting to book. So, we're a little bit ahead of the curve. And so we're going through this, and keep in mind, this is the first time we're doing this digitally, Steve. First time.
Okay.
One of the gentlemen was just like, hey, do you mind providing a copy of, the lease that we just signed? Because I guess for some reason when he signed it, he couldn't open up the software. I don't know. It's not DocuSign, but it's very similar to DocuSign. And for some reason it wouldn't send it to him. So I sent, what I saw was the signed version to everybody. But before I did that, my mom reads the email and immediately jumps to the conclusion, like, we don't send physical copies to people anymore. And I'm just losing my shit. Like, and maybe this isn't that funny, but I think it's hysterical. Like, my mom has been doing this, and they've been sending paper copies with my dad for God knows how long, 20, 30 years since they've been renting it out. They moved out of the house in the 70s, right? So they've been doing these leases on paper for the past like 30 something years. We do it one time. We just finished this lease, and she's like, we don't do paper copies anymore. And I'm just like, I start losing my shit. I think it's the most hysterical thing. And I'm like, Mom, what are you talking about? She's like, we're digital now. Like, we don't do that. Like, who's this guy think he is? And I'm like, Mom, I don't even think that's what he's asking. I think he just couldn't open the attachment in the email. Like, what are you on? But I just thought it was hysterical. Like, my mom is absolutely hysterical that she's just like immediately jumping to like, we're digital. Screw these people, these plebs on paper. So anyway, I just thought it was pretty funny.
Pretty crazy.
Yeah, she's in crazy. Mom moved into the 21st century. I thought it was funny. I thought I'd share it. Maybe it's not that funny.
Well, I don't know. We're going to see what happens tomorrow. And the whole market right now, I feel like, is on Jensen's shoulders. I really do. I'm scrolling through X, and I feel like this freaking picture could not be more true. The entire market right now is being held up by Nvidia.
I remember seeing this one last year. I thought it was hysterical. Are you did you buy any more recently?
Of what, Nvidia?
Yeah.
No, I think the last purchase I made was 2 months ago, 3 months ago. And it was in the 180s. And it wasn't 10 shares.
When would you potentially buy more, Steve?
I don't know. Listen, all I can say is that I have what I would consider a full position. And it is, if I didn't have the number of shares that I have right now, I would probably add, because I think there's a lot of value to be unlocked. But if they blow out earnings and don't go up and they sell off, I'm going to have to rethink this whole AI trade for the short term and see where I think it goes in the long term. I would say if Nvidia gets down to 150, I'm buying more.
With capital expanding. So if you don't see if you see, let's just say you see a softening in the future outlook of, would you trim some? Would you say, you know what I mean? Because we know this is a cyclical business.
Not unless the growth story changes significantly.
Yeah. I meant like the Capex softens, would you say, okay, maybe I need to get out? And because you've always, and I'm asking, I'm not trying to be mean. I'm just trying to understand where you're coming from. I'm not Nvidia. I see where you're at. I appreciate you and Tanner really leading this Nvidia charge and being shareholders, and I know Amit is as well. But you've always been, you personally, not speaking for Tanner or Amit, you personally, from what I interpret, is you've always wanted to get out at some point.
Yep.
And so right now you're thinking that's still 27, 28, or do you think that that could be accelerated forward?
Yeah,
Based off
listen,
the numbers you're seeing, you're pushing it out until,
yeah,
from what I'm understanding.
it could definitely be accelerated forward if the story changes. We've seen that the numbers from the hyperscalers is only getting bigger. So I don't think 26 is the year I want to get out. But I don't have a crystal ball. That could change halfway through the year. As of now, I'm thinking sometime in 27 or 28 is when I want to exit. But like I said, I need to see the data. Now, I'm not waiting, or I'm hoping that I'm going to be able to get out before these companies start to slow roll Capex, because I think that's going to cause Nvidia to come down. At the same time, I do think Nvidia is going to hit 250 to 300 before that happens. And I don't think we're going to see any news of that until the middle of 27. I think that once July, August comes and Microsoft delivers their 2026 full year results and fiscal year 27 guidance, I think they're going to come over the top. And then I think that Meta, Amazon, and Alphabet will respond in December, January. And I think 27 is going to be a really good year. But when I look at the actual numbers based on where the market, the consensus estimates have the forward projections, if Nvidia was to fall to 150, that puts them trading at 13 and a half times forward earnings. So that's where I would say, you know what, this is cheap enough where I can't refrain from buying. Like, I have to buy. What are you laughing at?
The shadow government.
Wow, that is so messed up.
That's savage, dude.
That is so fucking savage.
The shadow government can have all the dreams that they've ever wanted.
Savage.
If Steven just listened to me.
Savage.
Steve, in retrospect,
yeah,
had you put what? Well, yeah, maybe I shouldn't go down that road. I was gonna ask, like, approximately,
yeah,
how much money would you put into something? But I don't want to get that, because that opens a whole rabbit hole of stuff, and I don't want to do that. But I was, I've been very vocal that, for me, $100,000 is about what I would put into something. So, like, I know if someone was like, I'm going in hard, that's kind of like where my pivot point is to, like, how bullish am I on something. But I was gonna ask what that would be for Rocket Lab for you, to kind of gauge how much money you would have made, but I don't think that's appropriate.
Yeah, all I'm gonna say is it's not 100 shares.
There you
go. Like, it's
unless we're talking about A-class Berkshire shares, then that's
to some people, what I invest is not a lot of money. To some people, it may seem crazy. To some people, it may seem normal. I don't know. But when I'm making investments, I'm not typically throwing a couple of grand at something.
Yeah, I hear you. And that used to be my thing. That used to be all I could afford.
Yeah,
and that's part of the beauty of maturing as an investor, is you're able to go through time and adjust what your rules are, and that's the beautiful thing. The rules of yesterday are no longer the rules of today, because your portfolio matures. You have to be adaptive as an investor. If I was still keeping my maximums, I'd have my old maximums. I'd have 25 shares, or not 25 shares, 25 different companies that I'd be investing in. But what I've recognized is this doesn't work. I just don't have the time.
Yeah, well, listen, we'll see what happens. This is a big week. I have no idea what's going to happen.
You know what I'm excited for, Steve?
What's that?
I'm excited for, because I missed this cycle, and that's why I've been sitting out of Nvidia, right? I missed this cycle, point blank, and I'll openly admit that. What I'm excited for, and I think I've said this in the past, so hopefully it's not news to everybody. I'm excited for when you sell Nvidia, when you think that the game is slowing down, because just like cryptocurrency, It's cyclical, right? And you can never time the cycles perfectly. But what I'm excited for is people turning off, being like, it's not the time, it's not the time. Sell out of Nvidia, you know, and that gives me the opportunity to be like, Nvidia's not going away. There might be a
No.
slowdown. There might be a slowdown from when they go from data center build outs, et cetera, to then the massive build outs of consumer based robots, et cetera. But there's probably going to be a gap within there of a couple of years where I can swoop in and hopefully pick up some decent shares when Nvidia goes down to a $1.5–2 trillion market cap. Maybe it doesn't get that deep. Maybe it's only a $2.5–3 trillion market cap. But I mean, we're talking about Nvidia going to a $7.5 trillion market cap with you're saying $300 a share. I mean, you have to think like that's massive amounts. It's larger than almost any other economy except for maybe the Chinese and American economy. If I remember correctly, I think the third largest economy in the world, I think, is like between 3 to 10 billion, or sorry, 3 to 10 trillion. So you're talking about something that is literally the size of the third largest economy in the world, if I'm correct on that.
300 a share doesn't even make it expensive. It's still cheaper than Walmart and Costco.
Not wrong on that one.
I mean, look what I have highlighted here. It is still cheaper than Walmart and Costco. For it to trade at similar valuations.
Oh, Germany's back being the third largest economy.
$3.20 a share puts it at the same valuation as Walmart, Matt. I mean, and a lower forward valuation. So I don't know. Does Nvidia deserve to trade the same multiple as Walmart? I would say yes. And look, I'm not necessarily looking to exit the entire position. This could be something where when I decide that it's going to roll over, maybe I just take my initial investment out with a little bit of profit and let the rest roll. And whatever happens, happens in case I'm wrong. Because I may not be correct. I don't know.
Steve, you're always correct to me.
I mean, I'm not. Hey, Pirates of All Zero. The reason that I use it is because $1 of revenue equals $1 of revenue. A 10% growth rate is a 10% growth rate, and $1 of profit is $1 of profit. It does not matter if you're selling widgets or cloud space. Numbers are numbers. And the idea that different sectors get different valuations is stupid, in my opinion. It should be on growth rates and financials. Every company has the same fundamentals on financials. And if Walmart is getting that type of valuation, I'm sorry, Nvidia should be getting a bigger one. And I've disproven the whole revenue is sticky with Amazon because Amazon does more revenue. They have more revenue growth. And over the past decade, they have on a year-over-year basis added more revenue than both Walmart and Costco. So the idea that Walmart and Costco are durable because everybody has to buy groceries is bullshit.
Can I respectfully push back on something?
Absolutely.
So you said something that not all, like the fact that you evaluate different sectors on different. I'm curious what you mean by that. Do you mean that everyone should use price to earnings? Do you mean that everyone should use price to EBITDA?
I'm just saying that if you are an oil company, like I hate the idea that just because you're an oil company, I'm making up a fictitious thing. I'm not calling out individual companies. If you're in the oil space, but you are generating the same profitability as a tech company, the same revenue as a tech company, okay? But you're growing your revenue and earnings at a quicker rate, that there's a very good chance that the tech company would have a higher multiple than the oil company. I have a problem with that because $1 is equal to $1 and 10% is equal to 10%. It doesn't matter what sector you're in. And the idea that just because you are a bank, you should trade at a lower valuation because you're a financial institution is crazy to think like that. It should legitimately be, how profitable are you? What does your future growth rate look like? There's a lot of fundamentals that should come into play, but they just don't.
It's interesting to think because, you know, if anybody that's read 0 to 1, right, by Peter Thiel, they'll kind of recognize that pretty much companies are evaluated based off their potential for future cash flow.
Correct.
So, I think you're onto something here, because what may work for a technology company today might not work in 5 years. And so these companies are always having to consistently innovate. And so their previous cash flow may dry up. I think the reason potentially why technology companies have been able to get such a beautiful premium is because of their gross margins versus
Sure.
an oil company. You know, they have the issue associated with the cyclicality of having a commodities business and selling. You know, oil might be $100 today, but it might be 50 tomorrow.
But think about what you just said. The companies are valued on their potential for future cash flow. So you're telling me, not you, but the market's telling us that Walmart and Costco have better potential for future cash flow than Amazon?
Yeah,
Like,
that's where I'm
this is
confused by
it's
that as
fucking
well.
broken. It's broken.
That's where I'm confused on it as well. I get it. You know, should Walmart trade at a better premium than it did, 15 years ago when they didn't have Jet.com? Agreed. Yes, I think they should get a multiple because now they have Jet.com. They have the e-commerce store. They're doing really good with Walmart Plus. But 50 times, Steve? Come on. I'm with you. I still don't understand that as well.
So this is a great question. So Steve, are you stating that you didn't buy into what Josh's explanation to your wasting got why Costco trades at a multiple in your interview? No, I think Josh is 100% correct. I think the idea about why this is happening is ridiculous. Obviously, I think what Josh said is correct. And that's what my whole debate is around. It's not what Josh said. It's the idea that all these people have that are making that reality, because that's exactly why it's trading. Costco and Walmart are looked at as super durable because everybody has to buy groceries. That's not a good reason. It's just not. You can get everything on Amazon. And the data shows Amazon's revenue is just as sticky, if not stickier. So if we're going to say that Walmart and Costco are getting these valuations because of sticky revenue, you have to look at Amazon's growth rates. You have to look at how much revenue Amazon has added on a year-over-year basis, and it supersedes what Walmart and Costco have done. It's insane.
I mean, think about it. It means that you're saying that in 50 years, you're finally to get the earnings through. That you know what I mean? That you've been holding the stock for so long that now you've been able to, and you think about it, the dividend is going to be less than that, right? Like, that's the thing that kind of is scary to me. So it's like, because you're not going to have a permanent price to earnings ratio that is higher for long than your dividend payout. Or than your dividend yield, right? So if you think about it, like if you're trading at a 50 PE, it's very likely that your dividend's going to be way less than 2%. And so to me, it's just like, so then, what are you buying it for? Are you buying it because you think it's going to continue to be a dominant space? Are you buying it for its low Sharpe ratio? Like what are you buying it for? It's going to be around. Like what are you buying it for? Because it's not going to grow. It's not growing as fast as Amazon. So I don't know. And are they doing a shit ton of buybacks that I'm not aware of, Steve?
Who?
Costco and I know Costco does buybacks, but
I think both Costco and Walmart are.
But like massive amounts, or
we can look. So I want to answer this: is what Steve's saying true on a cash flow basis? Question mark. Is Costco producing more cash flow than Amazon? I never said that Costco is producing more cash flow than Amazon. I can show you what I've been saying, and I'll bring it up. I have a whole PowerPoint about it to clear up anything.
Yeah, please do.
Once again,
if this individual raised that question, maybe others are confused as well. I'm not confused. I know what you're saying, Steve.
Yeah. So this is not my numbers. These are the actual numbers. Okay. In the current revenue for Amazon is more than Walmart and Costco. Full stop. The annualized revenue growth in dollars for Amazon, represented by the red line on the graph, has exceeded Costco and Walmart every year going back to 2016.
Jesus Christ. It's over 100 billion a year.
What? Yeah. So from 26 through 28, over the next 3 years, Amazon is expected to do 293 billion in revenue growth, which is more than Walmart and Costco combined. When we look at revenue as a percentage, Amazon's average revenue growth is 12.1% over the next 3 years, whereas Costco and Walmart are in the mid-single digits. When we look at cash from operations, which is what that comment was saying, it is clear that Amazon does 139 billion in cash from operations, Walmart does 41, and Costco does 15 billion. They do more than double Walmart and Costco combined in cash from operations. You want to look at net income? Net income, they do more than triple, or about, not triple, but about 2.5x Walmart and Costco combined net income. Free cash flow, we know, is low because they are deploying so much into Capex. But you want to look at, on a totality, EBITDA or cash from operations, they're shattering these two. There's zero reason that they should have a bigger multiple than Amazon, especially since their margins are thin. Amazon at least has a 50% gross margin. Walmart and Costco are under 25%. You want to look at EBITDA margin, they're in the mid-single digits, whereas Amazon's at 20%. So there is no reason whatsoever that this narrative that these companies have stickier revenue or stickier profitability should hold. It's bullshit. It should be obliterated. But for some reason, it's not. Maybe I just do more homework than other people.
I mean, the price and net incomes are wild.
It's crazy. Why are we paying 46.5 times net income of Walmart when you can pay 27.5 times Amazon? And if Amazon is trading at that, why is Walmart getting a bid? Like, there's no clear answer that actually makes sense to this. I did not vibe code this spreadsheet. It's pretty easy to make.
You sure about this, Steve?
I mean, if it was Tevis, I'd say, yeah, he probably vibe coded it because the guy knows how to vibe code. I don't. Like, the market's not making any sense. And when we looked at this, and I should bring up the other one, because the other one is off of the current share prices. But when I made this, Amazon's trading at a much lower multiple, and it has more than double the EPS growth than these two. So I just think the whole narrative is ridiculous. That's just me.
What do you think Amazon should trade at? 30, 35?
I don't know. What's fair? Is it one of the best companies in the market? Yes. So if the market's trading, oh boy, we have a special guest backstage that will come on in 1 minute after I get this thought out. If the market is trading at 29 times current earnings, okay, I think Amazon should have a premium. That's just my opinion. But I want to bring somebody on that may have a different perspective about the whole Dr. Burry thing. Ned Flanders.
What's up, guys?
Happy Sunday, brother.
Where'd the glasses go? I came for the glasses.
It's for you.
I got to get me some of these Stark Industries, the Friday model.
I like it. Yeah, I might. If they were a little bit less tinted orange, I would feel a little less self-conscious wearing them.
No, bro. No, I feel like you're the modern day Hugh Hefner. Like honestly, I think it's the how orange they are is like, man, you need some real confidence, and you have it.
I don't know. Hugh Hefner is far from me. I'll tell you that.
Dude, just keep wearing them. It becomes you. Okay.
I like it.
Yeah. I don't get the confidence to wear this kind of stash. The stash gives me the confidence.
To wear it. I love it.
Yeah.
I'm curious about your thoughts on one. Did you see the Storytime thumbnail that I made? And then two, What did you think of Steven's rebuttal to Mr. Burry?
Steven's always going on the attack. I mean, I don't know. I think it's appropriate. I think Michael Burry's taking some shots right now. I think it's pretty clear I don't agree with him. Now, that doesn't mean that there maybe isn't something there, but I don't think any red flag means that the entire system is potentially broken or anything like this. So Steven's gonna, continue to bring up reasons, and I don't know if Michael Burry's gonna respond though. You're closer to getting blocked than getting a response. But yeah,
I'll say
similar with the Joseph Carlson stuff. I just don't think you're gonna get an answer.
me and him are good.
All good now?
Yeah, Joseph Carlson and I are good. There's no need to bring him up.
All right. No. I just you were going back and forth on Costco.
Bring him up.
Yeah, no, I'm just saying we're good. It's water under the bridge. We're good.
You read a very nicely worded email.
So,
Yeah.
but the reality is that I have a very strong opinion that if Burry feels there's accounting irregularities, he really should say what those are. Instead of, what he posted made it seem like fraud is going on.
Sure.
Someone said Burry blocked more users than the U.S. border blocked Mexicans. People from Mexico, rather.
I'm pretty sure you can call them Mexicans, no?
Well, I guess not everyone. There's evidence that a lot of the people that are crossing the border from Mexico aren't actually Mexicans.
I see.
They use the border in Mexico but it's a lot of people from all over.
So Tanner, how excited are you about this week?
Bro.
How excited is Tanner is the question.
A lot of things hang on the balance here. So Tuesday night, I got Mercado Libre. That's a company in the portfolio. Nubank, Nvidia, Salesforce, Chime, all on the same day. It's going to be a lot. The portfolio could take some pretty severe swings, but really it's all going to, the only real needle mover is going to be Nvidia. And then CoreWeave the day after, Shift 4 the day after. It's a big week. It's going to be a
Celsius too. That's one that I would love to get back. I hope it tanks. No offense to anybody that fear in Celsius.
And I think Rocket Money is reporting this week.
Yeah.
Yeah, Rocket Money. Yeah, it's not big enough to be on your fancy earnings whisper. Rocket Money and Rocket Labs, Steven. Both.
Zeta's reporting Tuesday. 1OK is reporting Monday. You got Hims reporting on Monday. That should be interesting. Let's see if it goes under 10 or not.
Is that Fiserv? IFIS? Is that what Fiserv is? Or is that something different?
Which day?
Tuesday before the open?
No, I'm pretty sure FIS is Fidelity Investment Services or whatever.
Got it.
They're another payments company, though.
So
Fidelity
Tanner,
Information Services.
Is Jensen going to take the market on his shoulders and just soar to the sky?
Yeah, it's a good question. I don't think that they're going to have some crushing beat. I actually think that the market is pretty good at valuing how well they're going to do. So what I want to say is earlier on in 2023, the surprises on their earnings were much, much wider than where they are today. Now, that doesn't mean that the growth is not going to be outstanding, but is it going to surprise Wall Street? Maybe not. I think that it really hangs in the balance of guidance. But yeah, I think that's the part that people should be more excited for is Jensen's comments. But even then, whenever he said the whole $500 billion comment, the market didn't even believe him to begin with. So I think that he just needs to continue to show up and put up the numbers that he said he was going to put up. I don't even think we need to see large beats. We just need to see, $65 billion. And if he can put up 66, great. But I don't think it's going to make too much of a difference. We're not going to see some 20% beat on revenue. It's not going to happen.
We need validation that the Capex spend is still happening, is what we need. We need strong guidance.
Yeah. Sorry, I didn't mean to interrupt on the flow. I was supposed to come on here earlier, but I have to get going really soon. I got about 10 more minutes, and then I got to go.
Where are you headed?
Sunday dinner.
Oh, a little Sunday dinner.
What are you
Little-
having for dinner, Tanner?
Little dinner reservation.
What do you
I
have?
don't know. It's some Asian restaurant. That's all I know.
All right.
Extended family or just the immediate or?
I guess you could say extended. Yeah.
Oh, good. Good.
Yeah.
You guys aren't getting hit by this nor'easter that's happening in the U.S.?
What's this?
Steve's getting hit by like 12 to 18 inches of snow today.
Oh no, it's snowing. It's not terrible.
That's an appetizer for Canada.
Yeah.
Yeah. north of the wall, that's just a daily thing.
No, but yeah, I'm gonna go see some of my girlfriend's side of the family.
There you go.
How do you
What
guys?
kind of Asian? That's the real question.
I don't know.
Okay.
Is
I'll
that
check in with
word?
you.
That's bad.
How do you feel about this?
Dude, Anthropic's legit.
So
However,
legit.
what is this valuation on OpenAI? That's not true. Their valuation's like $830 billion.
Yeah, I don't know. It's just what was posted.
Sam's trying to make Sam look bad.
Yeah, I think it's actually going to go through that Nvidia just invested $30 billion in OpenAI. I think that they're going to remain a big player. Everyone's calling for their death, but I think it's too early. But also, Steve, I heard your comment right before I jumped on about you not being able to vibe code. That's the whole thing about vibe coding, brother. Anyone can do it. And in fact, I've been starting to vibe code.
Yeah,
I showed Steve something that I vibe coded the other day.
Yeah.
I can't vibe code. I suck at life. What do you want?
No. You write articles for a living, okay? You could frickin' throw in a decent prompt or two. You could get, a lot of tools that might help you out with your business.
Should I share what I vibe coded, Steve?
I mean, Matt, don't want to compete with you.
No,
I wanna
Steve
share
doesn't
it.
write articles for a living, but he writes a lot of articles.
I write them for fun.
The articles write through Steve. Steve doesn't write the articles.
Steve's side projects are the same amount of time that it takes me to do my full-time YouTube work.
Yeah, I'm actually shocked that it took you that long, but I also don't know what you were doing. So
For what video? What do you mean? I'm confused.
Yeah, what are you talking about?
no, I'm talking about what you said you were doing before you had what you had to do before you came on. I thought that was going to take like not a long time.
Oh,
I mean, hey, I gotta sparse clips. Actually, you know what? I'll hit publish on that video right now. There you
Give
go.
me a link. I'll put it in the chat.
Um,
Post it in the private.
okay. It's a SoFi video. Who could have guessed? But
So Tanner,
yeah, just sparse some together some links. I like to make little presentations. I like to edit.
do Tanner's first.
so Tanner just put out a new video. Please go watch it when we're done.
I need to put it in mine actually. Did you hit publish? Did it hit publish?
What, on the video?
Yeah.
Yeah,
42 seconds ago. Okay, got it.
Yeah.
Oh, this will be good. So it's a clipped version.
There's a lot of really interesting stuff about his prepaid forward agreement and the legality behind when he can actually purchase again.
That's important. Yeah.
Wait, did
I'm
you just
excited
post the video as well?
On my channel, yeah.
Oh, dude, I didn't know that. I didn't try to take your.
Oh no! I put this is your video. Sorry, no.
Oh, okay. Sorry.
Yeah, so I'm posting on my channel so that because if Steve posts it, it doesn't go through everybody. It just goes to his, and I just want to make sure that everybody sees it on my channel.
Yeah. Okay. Cool. I thought you were showing off your.
Oh, no, I don't make any videos. I just go live with Steve. So.
Oh, hold on a sec. Ori, thank you very much. The article is in notes. The hell's notes? Let me go back to Cassandra Unchained.
I'm excited. This will be. They're clips from the actual interview.
Oh yeah.
In this.
Yeah.
You're a good dude. You're a good role model. And I know I came on her stream. I know I came on her stream the day. It was the last Friday. I know I came in her stream right before you released it, and I was able to like congratulate you. But like now I can officially congratulate. Like that's insane.
Crazy.
Because at the time it was kind of like, is it actually happening? Is it not? Well, I knew it was happening, but I couldn't say who it was.
Yeah.
But I'd heard from the grapevine, aka Steve. But of course, you guys are doing such big things.
I haven't heard who he's doing on the basis points. You should put it in the private chat.
Yeah, I'm sure he's got some stuff up his sleeve.
Steve, leak the deets.
Can't.
Oh, McCafe.
So Matt gets to know?
Matt doesn't know.
I don't know.
I haven't told anybody.
The only reason why I knew about Dan Ives is because I showed up and Steve and I were supposed to get breakfast that day, and he's like, actually, we're doing a podcast. And then I showed up and I'm like, holy shit, it's Dan Ives. So
yeah.
I was like, there's no way.
So I do stand corrected. Michael Burry did post this. It's in his notes, and his notes for paid subscribers only. So I guess he did put something out about this, which I'm not privy to because I do not pay.
Interesting.
Yeah. Now, how are you going to actually, are you buying more of these companies, the Mag 7 names right now?
The only one I have bought recently in the past 2 or 3 weeks is Microsoft. I have bought more Amazon, not a little bit past that. I am planning on buying more Amazon next week or the week after. I am planning on buying probably more Microsoft also. The others I would buy more, but I have full position in Meta and Nvidia.
So yeah. I will say I have a healthy bonus coming in next month. And if these prices stay deflated, I honestly, like, originally I was going to use it to buy like my future transition house to when I move potentially back to the northeast part of the US. If these prices stay, part of me is just like, screw that, I'll push it off another year. Like, why am I not putting this money into Amazon and Microsoft? But I don't know. I need to have a serious conversation with myself.
How close are you on getting to your goal, your Amazon share goal?
I'm at 70%, so I'm at 700 some shares. I want to get it closer to 1,000. And then as soon as I get to that, part of me is gonna be like, why am I stopping? So I'll probably end up keep going. But it ends up being, it always what ends up happening. I'm always just like, I want to get to, I forget what it was. Originally it was like $1 million worth in SPY. And now I'm like getting close to that. And I'm like, well, like, why would I stop at $1 million? You know, like, why not keep going? So, but it helps, right? Because then you're at least able to kind of keep a mindset on stuff. I think what ends up happening, unfortunately, with people is they're like, oh, you know, $5,000 is a lot of money, but they don't actually do the math to be like, okay, well, if this $5,000 actually does 20x, it's only 100 grand. I mean, that might be life-changing money for them, but they might think that without doing the math, they could, you know, think that it could be worth a couple $1 million. And it's like, well, the math doesn't work out, right? Like, Walmart's not going to go up by 40x. So, you know, you kind of need to have that thought of, okay, what do I think is reasonable in terms of market cap appreciation for this company? And that's what I did with Amazon. I was just like, okay, it'll eventually be, you know, $1,000 a share. You know, I want 1,000 shares, so it'll be worth $1 million. And that, I think that's the exercise I think a lot of people should go through, because unfortunately people are like, but I already have 200 shares. I'm like, but what's the reason for 200? Why are you stopping at 200?
Yeah.
Now, if there's a reason, you're like, oh, well, you know, it's my maximum that I'd be willing to lose, etc. But a lot of times you ask people that, and I'm not trying to be an ass when I ask that. I'm just generally curious, why 200? And just because I do something in one way doesn't mean everyone should. So.
No, I completely agree with that. All right, guys.
I'm excited for you, man. I'm excited for you, man. This is a big week. I'm really hoping. Did you move? I'm trying to remember. Did you move your price target to 275 for Nvidia for the year?
I don't think I really gave a price target, but I could definitely see. Well, I wouldn't say it's higher. I wouldn't say it's higher than that.
You're higher than Steve.
Conversation we had that this is at least $300.
Well, no, but I could see it at like nothing would surprise me if it was at 300. But yeah, I can't see a world where this doesn't get past 250 this year. Well, I mean, I can't. Okay, so hold on.
All right, I didn't mean to put you on the spot.
I really do think that it should be above a certain price, but the market doesn't pick its price based on what Tanner wants. So it can remain irrational, but if they're going to continue to grow at 60+%, I think that they should be well above 250, 275. I could even see them, pushing a nice valuation at $300. Is that going to happen this year? I don't know. But I'm also not basing, I've got no options or expiries on this company. I'm holding common shares, and I've got a, knock on wood, a very long time frame for investing. So I'm more, my goal for this company is a $10 trillion market cap, and then I'll reassess what's going to happen then. But, and then as it grows, right now it's like 48% of my portfolio. I don't really feel comfortable with it above 50. So I'm going to have to trim along the way to keep it under 50%. But then with that money, I'm going to keep it in artificial intelligence names. And honestly, I'm eyeballing more Nebius, CoreWeave, all these types of names, maybe even AMD. But at least I kind of get away from the idea of like, okay, if something happens to Jensen, then my whole portfolio blows up.
I've been having that thought a lot as well, because as you know, I'm a 10-year guy. Like, I look at things to try to be like where they're at in 10 years. And I'm like, dude, like these guys are gonna be getting pretty old, and do I trust the transition? And I was thinking about that with Nvidia, and I'm reading actually a really good book, Tanner. It's called Barbarians to, and I know you have to go, sorry. Barbarians to Bureaucrats. And it talks about the different types of leaders and what point you need different leaders within each company's business cycle and the culture of the company. And I'm like, holy shit. And I'm only a couple pages in, and I'm just like, that makes a lot of sense. But, Nvidia has been blessed by having this profit that is, that's literally what the book says, a profit. Just like Jobs was the prophet, just like Karp is the prophet, like in their particular company. And as you transition, do they have that transition right to who, and that worked well from Jobs to Tim Cook, but you're seeing the struggles that now Apple has based off of having Tim Cook. Are they innovating as much as they should? And is that okay? Is another question, right? Is that just the life cycle of the company? And eventually, now that you have that, you need somebody like somebody to come in. So it's really interesting, and I've been wondering that as well, because I'm investing in a lot of founder-led companies that have done wildly successful, but as they transition into second generation businesses. Anyway, so
dude, I completely agree, and I think Amazon's sort of in that range right now, going from Bezos the visionary to Andy Jassy, a little bit of more of the adult in the room, the same way that Tim Cook was the adult, pushing more. Well, obviously still revenue growth, but more margin growth at a sort of actually getting value for each dollar coming in. I think that's just the second phase of those businesses. Can I give a sleep tip before I go?
Yes.
And
a mic tip, because your mic is super warm. I haven't said this, but I've been listening more and more to your streams, and your settings are clocked in, dude.
Bro, I constantly hate my mic settings. So I don't know if it's right, but I just watched some videos. Buy good equipment that'll, SM7B.
Tanner, we need Sleep Corner with Tanner every show. You have
real quick, and then I gotta leave. The sleep tip of the day is that the bed should only be for sleeping. I told Matt this; he heard this, but you can maybe add in one extra activity. Okay, maybe some intimacy times or whatever like this in the bed. That's fine, but for real, sleep has to be what the bed is for. Your body, like no TV in the room, no phone, nothing like this in the bed. Absolutely not. You don't eat in the bed. No bed and breakfast. Whenever your body hits the bed, it needs to realize it's power down time. Okay, it'll help you go from that sort of always on mode to clocking out.
I'm bad with the phone in bed. I'm bad with that, but I've always had the the no TV in the bedroom sort of thing.
That
I've always
we sort
believed
of have a rule with my girlfriend and I, where the second that we are both in bed, all the lights have to be off, no phones, and we don't even have a TV in the room.
Love that.
I'm out.
Good man.
Have fun at dinner, Tanner.
Thank you.
That was Sleep Corner with Tanner, everyone.
I got
Sleepy time with Tanner.
Tanner, make sure you get. He left.
Make sure you
Anyway,
get what?
I was going to say, make sure he gets a new sleep tip for Wednesday at 8 p.m. so we can have Sleep Corner with Tanner. Anyway,
Dude, we spent like an hour and a half talking about sleep when we were in New York, and
he is going to be.
And I'm not upset about. I wasn't upset about it. That's not a complaint. That's just me being like, Tanner's a fountain of knowledge. So
he is going to be the next sleep professor. I'm telling you.
Dude, can you imagine if there's like he somehow gets a citizenship in the U.S. somehow, and they just some administrations like the Department of Sleep, it'll be Tanner.
Can we make a shirt with that? Tanner laying in a bed, Department of Sleep. Make a thumbnail of it. Let's make a T-shirt. That'd be hilarious. All right.
Speaking of, we need to get some of your T-shirts up and running, Steve.
So let's end on this. I saw something on X that I want to discuss. Global investors hold a record 64.1 trillion in U.S. financial assets. It only goes up in the long term. There are peaks and valleys in the short term, obviously. But since 1990, this has only gone up. Do we really think that the number of financial assets held in the U.S. is going to decline on a long-term scale over the next 5 to 10 years? I don't. And if the answer is no, why would we think that the market is not going to be significantly higher or GDP is not going to be significantly higher in 5 to 10 years? I think this is really interesting. And I think the idea that at least in the U.S., everybody's a forced buyer in retirement accounts every 2 weeks, and there's just more and more capital going into U.S. assets. I think this is super bullish for the freaking S&P. How do you feel, Matt?
I mean, I think it's just a reason why you can't bet against the United States.
Correct.
I'm just surprised at how much it's grown. Is this just, I guess I'm curious, I guess the access to markets, this is a question for the broader audience and yourself, Steve. I'm surprised that 1990, so this is about my lifetime here. It was below $5 trillion and I'm guessing that is when it says global investors, I'm assuming it's non-institutional is what I'm anticipating.
I have no idea. It's not clarifying. It's just saying source Federal Reserve.
I'm assuming it's just non-US. So I guess this is access that people have to the US markets.
I mean, it is specifically saying foreign held U.S. financial assets, $70 trillion.
It's impressive. I mean, we make it easy. I mean, I tried investing. There's a really good Korean company. I won't say what, but I've explored how do I get access to invest in that company. There's no OTC on the U.S. exchange. And I want to invest in that company. They're doing really good stuff. They're investing in really great companies. They have a venture capital arm that it's a company that I want to invest in. And unfortunately, I don't have the ability to. The United States makes it very simple, I believe, for people to invest. So the stocks are always going to benefit from that.
Yeah, I just think it's super interesting that the amount of capital held from foreign investors in the U.S. is huge. This doesn't include U.S. investors, and you can't bet against the U.S. economy. So I just think S&P and chill is such a great idea. My opinion.
I like it, Steve. I like it. Do we give people a sneak peek of what I've been vibe coding, Steve?
Only if you want to. You said you didn't want to the other day. You want to?
Yeah, let's give it a go.
All right. Is it
What?
on this thing to add to stage?
Yeah. What ticker symbol are we doing?
All right, everyone. We're going to end on this. Maddie's been working on something. Do Amazon, AMZN, baby.
Okay. Just let me know when you're ready. I might
We're
run
ready.
out of tokens, but basically, and it's not perfect. By no means is it perfect, but spent many hours kind of building something like this. But it's basically going to give probabilistic distributions, price targets, SWOT analysis of strength, weaknesses, opportunities, threats, and potential catalysts for particular companies. And so yeah, you can pretty much type in whatever. And like I said, it's not perfect. I still want to put some fine tooth details into the or fine tooth it and stuff like that. But hopefully, what you do is you'll be able to have a set amount of stocks and be able to look at them. And the hope would then be is that based off of news that's incoming, headlines, etc., if it changes the probabilistic distribution, you'll be able to kind of see it. And please bear with me because I know I've been changing around the formatting and stuff like that. But the hope is that you can, as I always kind of talk about, estimate what potentially the likelihood is of your company outperforming, say, the S&P 500 over a given time. And what you kind of see on the screen here are P5s and P95s and everything in between with respect to what's going on. You can kind of scroll through and look at what potential price targets might be for the next for the next year or so, depending on what's going on. The executive summary of the company, the 1 year outlook, why it's up, down, sideways, etc. What's could potentially drag it up or down, and then same thing with over the next 5 years, what potentially is going to happen with it. And there's a lot of other stuff in here. There's the SWOT, there's the catalysts in here, so profitability for AWS, AI investment returns, etc., and kind of stating when they're going to happen. But then you also have key risks, opportunities, analysis. So hopefully it updates every time that there's new details kind of coming in. But then also you can get some really cool stuff in here as well, which let me zoom out to the normal size, which I'm still adjusting. But there's a lot of items in here like the news feed. So if there's any headlines, it'll pull up for you. Credit rating, which to me is very important. So you know if a company has high debt and they have a very bad credit rating, their interest payments might actually go up compared to down. And we're always trying to look for, Verizon, for example. We're always hoping that it can kind of move in a certain direction. Dividend information, which is spotty. Sometimes it says there's dividends, sometimes it says there's not, depending on what company it is. Then you can see net debt as well, current outstanding bonds that are there, upcoming earnings, and this isn't final, right? I hope to move this to make it a little bit better, but there's that, and then price targets. These are old. I'm trying to figure out how to make these more up to date, but the hope is that you'll be able to get different banks' opinions as to what the price targets will be, and that would then coincide with this graphic here to say, where do people think it's going to be in a year, right? And then also, what else? Insider transactions, which I haven't gotten working yet, and then also the SEC. So if you want to pull up the recent investment earnings report, you can do that. And then also hope to have a chat feature here as well, so people like yourself or myself can kind of interact and talk about specifically what stocks they want to or why they think is something, and you have to sign in with a Google account. So it's not like you can be Billy Bob Thornton fake account, right? Like it's actually attached to your specific Google account. Now there's always going to be people that can get around that and troll, but the hope is that you're signing in serious, and you can make a username, I'm sure, but it's at least tied to a specific account. But anyway, thoughts on this, Steve?
Where did you code this with? You coded with Gemini or Claude?
It's not important.
Okay.
I need to update the format, but
yeah, I think it. The only thing I would say, I think it's great. I think there's a lot of information. on one screen, I don't know where to look.
No, yeah, 100%. And part of me has thought, like, do you separate this into specific tabs? Do you have a light mode? Do you have a dark mode? You can also hide things as well. So like initially, if you come in here and you're like, I don't give a shit about any of this. All I care about.
Oh, okay. So that I think it's fine then. If you can hide whatever you want, I think it's fine.
Well, also another piece as well is trying to get it so that you're able to move these things as well. It doesn't necessarily allow you to do it so easily, but my hope is that you can. And also, I'm trying to get it so you can print it as well. So like you could keep stored things as well.
Do you want to put the link for people to sign up or not?
It's not ready for that yet, but it does cost a shit ton of money. Actually, not a shit ton, but like I've already blown through some serious money building this. And so there's going to be a free version if I do actually put it out. I'm still trying to decide. I'm on the edge. I feel bad like charging people for stuff, but at the same time, it's like if people would value this, I would not try to destroy people. I'm trying to figure out how much it costs to run, and I'm more than happy to just being the guy that it flows through, right? Like if people use it and like, all I would want is just a little bit of money. I wouldn't want anything that's like, I'm not trying to get fucking billionaire rich, so all I would probably do is just try to figure out on a constant basis, one, how to get costs down so I could keep it cheap for people. Because obviously, prime example, right? Every time I hit Amazon, it'll recalculate things, right? But there should be a prime example of if there's no new news, the target shouldn't have changed, right? We're at Sunday here at 5 p.m. your time. Like unless there's news and the market's not open, it shouldn't change. So there should be no compute power if I just type Amazon again, because all it has to do is pull up this current analysis because nothing has changed. And so, so that's kind of the thought process is like, how do you get costs down? Obviously, you don't need to use ChatGPT-4 to be able to search for headlines. You could use a much cheaper a much cheaper LLM to be able to search through headlines or something like that. So, so yeah, and I might try to recreate this as well in different, like I might try it in Replit. I might try it in a few others. So I might just tell them like, hey, here's this, and people are saying, oh, is it cost? Yeah, it costs money to use and build these things. You can't just do you can't just like pull up Gemini and say, hey, Gemini, like Gemini will eventually pause you. And I have been paused on Gemini for asking it to do things. It says, even though I have a paid, they are limiting you and throttling you on certain things. So, yes, I have stopped. I've been stopped multiple times. Like, they give you free credits for your daily usage. So anyway, I'll stop there. But like, they give me a certain amount of credits that I can use per day. But if I go over that, I get charged. And then same thing with hosting fees. This is obviously hosting. So, and I don't know, would like to try to make it a usable on a phone as well, but it might be more difficult to use it on a phone.
Well, I like it. So I think when you're ready, I think you need to debut it on stream and let's see what people think.
Yeah, one's in the chat. If you actually think you potentially use this as a free version, I'm trying to figure out what part of it would be free, what part of it would be freemium, so you actually have to pay for slightly more. But I think there's a lot of things in here as well that people would. Well, if you got Bloomberg, then you're good, my guy. But that'll also cost you $35,000 a year. And no offense to Bloomberg, they create a great product, but I don't nearly anticipate charging. I mean, I would probably just off the top of my head charge less than 1% of that. So if people want to pay for Bloomberg will also have a lot more information than this. But regardless, yeah, I mean, I would try to think about how to make this as cheap as possible. There's so many different ways to make this more efficient than it is right now. So, and also, I'd also want to check with other LLMs because this is one particular LLM. I might have a toggle that you can have multiple LLMs pull and do analysis, but that might be another feature. They might just have like a standard LLM as part of the freemium, and then or the free version, and then if you want to test different things, and also a key thing, right? So this was the thing that I always wanted, right, Steve? Because I have this conversation a lot with a lot of my deep dives that I do. So this catalyst piece that you see here, so I'll zoom in. So you see this catalyst piece of like AWS profitability and AI investment returns, etc. The thought that I kind of had about this is like, well, what if you're able to then input that, right, into input like your own particular things into the analysis that wouldn't change the current analysis, right? Because this is going to be, you know, the Rosetta Stone in terms of like what this comes up with for this LLM will be what it shows. But you could potentially manipulate and say, well, what if you're able to say that margins for the AWS business go up to 40% or what have you? What does that have an impact to all the different things? And it might just change the downside. It might just change the upside, you know, and that's kind of the hope as well, is that it sorts through all headlines that come through, articles that people are writing that you see on the news feed on the right-hand side, and it ranks them to see in priority, like what is actually important that should be taken into account, what should not be. Because obviously there's going to be a lot of people writing about Amazon, right? It's a $3 trillion company. People talk about Amazon. We're talking about Amazon right now. You know, is what I'm saying right now actually going to move the stock price? Probably not. But if something comes in about margins, or they get a new customer, or they say they're going to go and invest $250 billion instead of 200, you know, that obviously can have an impact to what the future share price looks like. So there's that kind of piece.
I like it. When is it going to be done, Matt?
I don't know. I mean, it looked like some people are really interested. I wouldn't expect that kind of feedback. So if people actually really want this is something that could get a freemium version up really quickly. And the hope would be is to figure out how to make it cheap. So there's some efficiencies that I'd want to put in place before I get it to people, but I'd only start with the free version, likely. You know, to see what people like and get feedback from them. And then once I feel like it was sufficient, I'm more than happy to go in and pay for something for a lot of people to use if they think it's useful, and then figure out, you know, how much it's going to be costing, and then hopefully come up with a reasonable price point for everybody to kind of get involved in. So, but there will be a free version. So hopefully it's like you could use a certain amount of tokens a day on me, you know, and get some information if you like it. And then if you want, if say it's just, like, for example, this chat feature, like if you're a big person, and I took that from Godel, I took that from Bloomberg, right? Like I'm not trying to say that I'm, you know, come up with this idea, but the hope is that you have like June wants to talk about AWS or something, like, or Amazon, and she has a bunch of good ideas around it. She could talk about it with people that are also like-minded about it, that she trusts, right? And the hope would be, you know, I don't mind kicking somebody off the platform if I don't like them. I'm not trying to make it an echo chamber or anything like that. But if somebody's just strictly trolling to no end and not providing any value, I'd rather not have their business and have a community of like-minded folks that I can continue. And this builds on the Street Exchange, hopefully as well, as a tool. So what I might do also is integrate this with the Street Exchange YouTube channel. And if people are interested, you know, before they even sign up, because I know some people are cautious about what they actually sign up with, and I get it. But the hope would be is that if they're curious, you know, this potentially could be the basis of what I use for Street Exchange. And if people are curious, like, hey, Abby, give me an update on what you think Amazon's price target could be for the next 2 years or something like that. It'll give it, you know, a free things or something like that. So
I like it. Well,
we'll see. There's a lot of thoughts about it that I'm going to put into it. So appreciate you letting me share.
Yeah, so I think everybody should let Matt know if they're interested. And let's see if Matt can get something in production for everybody. I'll use it.
Steve, you get free version
Oh,
for usage.
like that. All right, everyone. Then we're going to call it. Got to get dinner. Got to
But
finish
again,
my Microsoft article.
Again,
And we
Steve.
got industry. And we got a Night of the Seven Kingdoms tonight.
Steve, I have to be honest with you. I didn't finish Billions last night.
I knew you didn't. You want to know why?
You get a
Because
text.
you didn't say anything.
Steve, I don't need to ask if you're disappointed in me. I already know.
Are you going to finish it tonight?
What episode am I on? I'm getting close. It feels like you can definitely tell that they're like trying to rush it. I'm getting close, Steve. I'm almost on episode 9. So I think, what is that? I have 9, 10, 11, 12. I only have 4 episodes left, Steve. I'm almost done episode 9 or 8. Sorry.
Okay.
In fact, I think I am done episode 8. I just have to click it because it's got like an 8 left. Maybe it is all credits. I don't know.
Sounds good. All right, everybody. We're going to get going. See everyone tomorrow. Please go follow Matt. And we'll see you, I guess, during the week. Try to stay warm and stay out of the snow if you're in the Northeast. Thank you for being here, everyone.
Love you. Loving Steve is easy because he's beautiful.